Cava Group's stock jumped 14.2% on August 12, 2026, after the company reported second quarter earnings and revenue that both beat Wall Street's expectations. And, just as importantly, said the food safety traffic scare that had been hammering the stock was starting to ease. To understand why that bounce mattered, you need to know where the stock had been. In February, after fourth quarter results, the stock jumped 26.4% in a single day. In April 2026, it peaked at $97.39. Then came a food safety scare. Cyclospora, a parasite linked to lettuce, started showing up in headlines, and customers got nervous about eating at Cava. Traffic fell, and the stock fell with it. By August 11, the stock had lost 37.6% from that April peak, closing at $60.81, the bottom of the entire drawdown. The earnings landed in the AUG 1112 window, and the headline numbers were a beat. Adjusted earnings came in at 19 cents per share, a penny ahead of the 18 cents analysts expected. Revenue was $368.44 million, ahead of the $360.09 million consensus and up 31.3% from the same quarter last year. Management also said the cyclospora-related traffic slowdown was easing, a direct answer to the exact fear that had caused the drawdown. There's some ambiguity about the exact timing, whether the report hit late on August 11th, making that day's drop to the bottom the initial reaction, or early on August 12th, making the beat the direct trigger for the bounce. What's clear is that by the close on August 12th, the stock had surged 14.2% to $69.47. That's a big one-day gain, but it still left the stock about 29% below its April peak. So why did the market react this way? Let's start with the mechanism. A company like Cava is worth whatever investors think it will earn in the future, and those earnings depend on people walking in the door and buying food. When a food safety scare hits, customers stay away, traffic drops, and same-store sales, the measure of how much each existing restaurant sells, start to fall. That directly threatens future profits, so investors sell the stock. Now, the earnings report changed the picture in two ways. First, the beat, 19 cents a share, a penny ahead of estimates. When a company reports revenue and profit above what analysts expected, it means the business is doing better than the market had assumed. That alone would justify a higher stock price. But the more important news was the comment about traffic. Management said the cyclospora-related slowdown was easing. That was a direct answer to the overhang that had caused the 37.6% drawdown. It told investors that the worst of the scare was passing, and that the sell-off had gone too far. The size of the bounce also makes sense from where the stock started. The day before the surge, Cava closed at $60.81, the lowest close of the entire drawdown. When a stock has been beaten down that far, the bad news is already baked into the price. So when a company comes out with a beat and a reassuring comment, there's a lot of room for the price to snap back. That's why a 14% jump off the bottom is less surprising than it sounds. One more thing worth noting. Not everyone read the report as an unqualified win. Some observers focused on softer operating details and called the results mixed but not disastrous. And the revised guidance, the company's own forecast for the future, was referenced without specific numbers, so the market didn't get a clean read on whether the company was raising or lowering its outlook. But the market's verdict on August 12th was clear. The beat and the easing traffic comment outweighed the concerns. The bounce carried through the week. By August 17th, the stock had climbed further to $71.02, keeping the recovery going. Where things stand now, the stock bounced, but it's still about 27% below its April peak. The unresolved questions are whether the traffic recovery actually holds up in the coming months, whether the revised guidance points to a slowdown or just a tweak, and whether any new food safety headlines emerge. The market has given Cava the benefit of the doubt for now, but the proof will come in the next round of traffic and same-store sales data.